And I'm just Delos Santos. It's a start of a new trading day, but first, let's go straight to the story. The Energy Department has declared a moratorium on new coal power plant projects. Energy Secretary Alfonso Busi said the decision to halt endorsement of greenfield coal-fired plants came after the agency's recent assessment showed the need for a more flexible power supply mix. During a virtual conference for world leaders, Busi said the move would help build a more sustainable power system amid structural changes in demand. DOE Undersecretary Wimpy Fentabella said the ban on endorsing new coal-fired power plants will now affect those that were already given prior endorsements. As of August, there are 3,436 megawatts of committed coal-fired plants in Luzon, including projects by Meralco Power Gen Corporation and GN Power Danie, which is a joint venture of the Ayala and Aboitiz groups. The DOE has also endorsed 135 megawatts of coal run projects in Visayas and 420 megawatts in Mindanao. Fentabella said the ban will remain in effect until the country would need additional baseload power. Meanwhile, Secretary Busi said the Philippines is now allowing full foreign ownership in large-scale geothermal projects. These are projects with an initial investment cost of $50 million, which would be approved through a Financial and Technical Assistance Agreement, or FTAA. All right, and even before this directive, oil producers were already feeling the pinch of thin margins. We've got reports that our only remaining refinery is closing very soon. What's the latest on that one?
Okay, so all eyes are on the energy space right now, Jess. As you mentioned there, perhaps environmentalists celebrating that, but you've also got closures that might be happening on the back of that. But this was actually even before that directive, as you mentioned, and this is related to Petron's Bataan refinery. Now, recall that you had the Shell refinery in Tabangao, that's in Batangas, having recently closed. It was 2 months ago, and their main reason was that because of the COVID-19 crisis and the pandemic, it's been very, very weak demand in terms of fuel. It's actually cheaper to start importing. So they've pivoted into an import terminal na lang. And on the back of that, we actually had Petron already issuing statements even before that might be a possibility. And right now, this a statement from its top official on Tuesday, that's of course Ramon Ang, saying that they will be closing its 180,000 barrel per day refinery in Bataan, quote, very soon. So he's saying they're continuing to bear the losses from a challenged refining environment and what he calls an uneven playing field. So this is something that he told reporters in an online briefing yesterday, that unless the Philippines is able to provide a level playing field, particularly for the taxation, the company will have to close. It's had billions of pesos in losses because of taxes. So what are the taxes right now? Oil refiners have a 12% input VAT for the imported crude oil, and then that has to be refined. And then when those products are sold, there's another 12% output VAT tax, diba? But if you're only importing, you're actually only doing the 12%. So he's questioning that, saying the only way to save, the refinery is going to Congress, asking lawmakers to amend this tax regime. Now, initially, when this all was a concern, Finance Secretary Sonny Dominguez said it's not about the tax laws, it's just about the supply chain issue. But right now, there's some news on that. The Department of Energy says that it will be looking into the tax concerns raised by Petron. They did mention they haven't received actually notification from Petron on Bataan. They were just hearing these reports also from the media. Now, what is an interesting part here is, okay, even if the DOE says there's no real adverse impact on the fuel supply if Bataan also closes, kasi we have enough imports naman, you actually got Fitch Solutions saying in a research note last week that this might be a risk for the economy if we become more and more dependent on imports. Of course, the fluctuation of the oil prices will be very much linked to us now, diba? Right now, we're 48% dependency, and that was expected to jump to close to 70% by 2025 on imports, and that might rise even faster than 2025. And Fitch says that if we have more dependence on that, this might actually impact our forex reserves and even our ability to attract foreign investment. So a very big deal here. Petron trading down by 2.8% on the back of
Mhm.
this news. Now, still on the topic of energy, I just want to break Semirara's net income. Of course, Semirara produces coal, which is the feed in towards a lot of energy power plants here, and which is very much related to our main banner story. Their third quarter net income has actually slid by 71% year on year. So that is at 700 million
Mhm.
pesos. That brings their 9-month net income down by 63% to 3 billion pesos. Not surprising here, the coal segment was affected by the lower export prices and the volumes that were lower in third quarter. So in terms of power, for example, the total energy that they sold was down 23% year on year. So, of course, a lot of closures in businesses here, less energy needed, a lot of power plants also shutting down. And there's also the spot market, which was very cheap. So, the core profit at their coal unit in particular fell 57%. Now, you can see Semirara also in the red this morning, down a hefty 6%. I have to highlight that 6% in
Mhm.
the first 5 minutes of trade on the back of all of this third quarter earnings. Now let's move on, not just from the oil space, but also just to the mines, particularly to the nickel mines. Recall that there's been a lot of attention on this. Also, nickel has been increasing in prices, but you've got the miners struggling to start reopening because of the COVID-19 cases. And we had reported before that Philex Mining had to suspend its operations. And now a new one na naman, Nickel Asia,
Mhm.
had to suspend operations in Surigao del Norte. That's until November 10. That's after some of its employees tested positive for COVID. They're saying, though, that the impact to earnings will not likely be too big. Particularly, this is in their Hinatuan mine. They said that they're already in the tail end of the season, so they've done most of the work. Meanwhile, you've got Philex Mining, which earlier halted operations. It's now at 50% capacity the Dow, and they expect to improve this to 90% in 3 days. So a lot of things going on. You do see PXP Energy leading the pack here of that counter that's up by 5 and 6 tenths of 8%. Nickel Asia still in the green despite all of this news of a shutdown temporarily, Jess.
Definitely lots of things to watch out for among our oil and miners rather. But then moving over to the broad index here, 6 day stretch of a rally brought in a lot of profit takers. Tell us more.
Okay, so you can see that, diba, on my terminal here, how it's a just major jump here on Monday,
Mhm.
and then it continued that trend until there was quite a pullback yesterday. But this pullback was largely expected, of course, not just because we've been 6 days in the green, but also because the rest of Asia saw quite a sell-off. So we really just joined that regional sell-off, and the biggest drag was SM Prime. They had reported a 48% drop in their 9-month income yesterday, and that was digested by markets, and they were the worst performer yesterday. And this happened even as the overseas funds still were buying into our market. So that's a fifth straight day into the market. And what is Jonathan Ravella saying here? What happened? He said that a lot of investors were anticipating better third quarter earnings, diba? And since these aren't meeting
Mhm.
their expectations, they might have actually started selling off because of that. So the disappointment in earnings. He said the market was already overbought. Everyone was hoping for it to breach 6,500. That didn't necessarily fall. For example, you've got Meralco, which we reported yesterday, posting a 30% decline in the third quarter net income, and that was what also sold off by 1%. You can see now we're trading below 6,400 na naman. So we're down by 3 tenths of 8% at the
Mhm.
open. And I just want to take a quick peek at Converge, because this was, of course, everyone was looking at that since Monday's listing in the IPO, whether that has actually rebounded, because that had retreated for a second straight day yesterday. So during the open, it was actually already falling, diba? So you can actually see that
Mhm.
right here in 3 days of trade, down by 16%. So medyo malayo pa rin siya to the IPO price. It's now trading at 14 pesos right now, diba? So it's still quite far from the 16 pesos 80 centavos. It fell by as much as 13% yesterday, actually, which extended Monday's debut, which was down by 9.4%. Now, what is interesting, what is happening here, Jess? A lot of excitement on Converge. It was oversubscribed, but this, according to several analysts here, maybe daw a lot of like AP Securities Rachel Cruz, there might actually be a reality check because investors are realizing that with the economy slowly reopening, there might be opportunity to buy the undervalued stocks na lang, diba? And actually rotate their money instead of buying into tech stocks, which some analysts have said have been very, very expensive. So they're actually becoming more attractive, these other stocks and the rest of the stocks in the economy. So maraming competition in terms of Converge right now. But you still have Astro del Castillo of First Grade Finance saying that for long-term investors and believers of Converge, this has actually opened up a buying window. Of course, it's cheaper than you would have bought if you had bought at the IPO price. Another thing that AP Securities is saying that could help turn around Converge story is their third quarter earnings. So if they show that there is rapid growth happening, that might actually support the stock's high multiple. So a lot of eyes still, turning into Converge. Now, enough for earnings for now, Jess. You do have a set of figures of your own. So the country actually, despite the pandemic, is inching its way up the sustainable trade index. What does that mean?
All right, we're seeing some improvements here, at least compared to how we stood back in 2018. But you know what? Despite that improvement, there might be some caveat to this, and that's something we're going to drive on later on as I continue on with this sustainable trade index here. Again, on the bright side, we are up one spot to the eighth place here, topping other emerging markets in Asia. That, of course, is from the Sustainable Trade Index of 2020, as research by the Economist Intelligence Unit, sponsored by the Heinrich Foundation. Again, this is a survey of 20 economies, and they were measured at least in three pillars here. You have the economic pillar, there's also the social pillar, and the environmental. Now, if you try to take a look at how the Philippines perform in all three pillars here, it would show, at least at the economic level and the social level, the Philippines was given above average scores here out of 100. At the economic front, we are at 58.6. Socially, we are at 62.4 as well. However, there might be some needs for improvement here on the environmental aspect, as we are at 46.6. But overall, the country garnered 55.9 in its trade index score here, again, putting the country on the 8th spot. Now, let's try to focus in on the economic pillar for now. In fact, we did see a rebound from how we stood back in 2018. I mean, that's basically a rebound from 2016 levels after falling to the 15th place back in 2018. According to the research, there was a light improvement in growth per capita GDP, as well as some depth being seen in the financial sector and a gross fixed capital formation as well. However, there are some rooms for improvement here, the likes of export market concentration, as well as trade costs, and of course, technological innovation. Now, when it comes to social pillar, again, we did see a big improvement here. We are up to the 6th spot from the 10th spot previously back in 2018, according to the study or to the group. We benefited from changes in labor standards here that was expanded to measure goods from forced and child labor. And the Philippines actually moved up due to low volume of goods from forced labor. We also have limited gender discrimination in hiring. That's according to the study. And that, of course, helped in the improved standing of the country as well. But it's a totally different story when we're talking about child labor. A number of goods, according to the group, are being produced in the country. We're talking about from fruits to metal, even to manufactured goods. A number of those are being produced via child labor. So again, that's something that the country needs to work on, at least according to this latest study, the Sustainability Trade Index. On the environmental level, we're around the same with global average here. But here's the caveat. You have here Chris Clegg, the Economic Intelligence Unit Managing Editor. He did say that the Philippines' better ranking is mainly due to us holding steady in terms of policies and practices, rather than putting into place substantial progress. So according to him, we're basically moving up by not regressing. And that's not an encouraging trend for an economy that, like Vietnam, has been made a mark rather by many as representing the future of the Asian region. Now, just to give you an idea, on the index here, you have Japan and Korea topping the list of 20 economies here. They are in fact tied at 75.1. This is the first time that there was a tie among these economies. They are two of only three countries being surveyed with carbon pricing scheme in place. So that of course is largely expected here. Again, the country moving up in its trade sustainability trade index, but again, moving up by not progressing according to the group is not really an encouraging story.
Okay, so trying to keep our foot pa rin there. And of course, just, as you mentioned, this new directive of coal-fired power plants not anymore being, encouraged might actually bode well for this new standing.
Mm-hmm.
Checking in on the biggest headlines we're keeping our eyes on, Metro Pacific Tollways announces that the 30 billion peso Cebu-Cordova Link Expressway project is more than 60% completed. Now, in a statement, MPTC said the overall engineering, procurement, and construction progress rate of CCLEX is at 61%, while construction is done by almost half. MPTC subsidiary CCLEC is undertaking the bridge project under a joint venture agreement with Cebu City and the municipality of Cordova. CCLEC President and General Manager Alan Alfon said despite the pandemic, the project is expected to be nearing substantial completion by next year. The original schedule for the bridge's opening was set in March of 2021, which will mark the 500th anniversary of Magellan's expedition arrival. The expressway is one of the country's largest infrastructure projects, and it is expected to be used by around 50,000 vehicles daily, easing the congestion in Metro Cebu. Now, the House of Representatives has transmitted the 4.5 trillion peso proposed national spending plan to the Senate, beating their deadline. The lower house was originally set to transmit the budget bill to Senate today, but they did so a day early. House Speaker Lord Alan Velasco said the record high budget for next year will be more reflective and responsive to the needs of the public amid the ongoing pandemic. Senate President Tito Soto confirmed that they have received the General Appropriations Bill from the lower house. He said the swift passage of the budget bill at the lower house ensures more time for deliberations at the Senate and to have it ready for signing by the President before Christmas. Before submitting the bill to the Senate, the small House committee managed to increase the budget for COVID-19 vaccine procurement and provide additional funding for the DOH's Health Facilities Enhancement Program.
The International Labour Organization reports that the pandemic has slashed exports of the country's garment industry by almost 40%, putting the livelihood of around 600,000 workers at risk. An official from the municipality of Taytay, which is informally called the garment capital of the Philippines, said garment stalls could have a loss around 500 million pesos in sales during the stricter lockdown. ILO study noted that textile manufacturers all over Asia experienced plummeting sales, closed factories, and lower wages. The Philippines is one of the region's 10 major textile producing nations. Global textile trade collapsed in the first half as exports to major buying regions in the EU, the US, and Japan fell by as much as 70%. We'll have more of the business and markets news when Business World Live returns after this short break. Stay with us. together with other regions, will still be under general community quarantine all throughout November. Now, how does this bode for business owners who, as it is, already have to deal with shelling out for their employees' 13th month pay? Now, to talk about that, we have Roland Moya. He is the Director General of the Employers Confederation of the Philippines. Good morning, Sir Roland. Great to have you with us on the show.
Good morning,
Good
sir.
morning.
All right, sir. Let's kick things off, of course, with that bit of news. NCR under GCQ together with other areas like Batangas. How might this affect business owners yet again?
Well, of course, it's a welcome development because the the shift to GCQ would mean that more businesses are going to operate, and the economy is slowly opening up, and that means that workers will start going back to work, and the economy would be more or less operational now.
But at the same time, are there any other rooms for easing that you would like to see at least being implemented? I mean, for the past few weeks, we have been seeing travel restrictions as well as curfew hours, in fact, already being eased. Would lower restrictions to MGCQ be needed, or are there further easing that you would like to see?
I think one area that should be looked into is the transportation. We know for a fact that uh, the restrictions are still very much in place, and well, we could see that people are still lining up, and we have long queues for people to get onto the public transport like buses, uh, uh, jeepneys, and forget about social distancing. So, but I think the restoration of transportation is critical to for the for businesses to continue their operations.
Sir,
And of
can you give
course,
us? Go ahead,
the
sir.
lockdown in specific areas would also give rise to certain restrictions, and would prevent some business from operating fully.
Sir, can you give us more details on which industries can actually survive the lockdown long term? So perhaps, during the period where there is all of these closures, they might be temporarily closed. But to what extent are you expecting, a recovery? And after all of these restrictions are eased, they are able to go get back on their feet. And to what extent are you expecting permanent long-term closures?
Well, a US-based research institute predicted that the recovery will be slow and uneven. We know for a fact that the country suffered one of the worst recession um, ever, and of course, predictably, businesses will continue to struggle in terms of recovery because the restrictions are still there. But hopefully, when these restrictions are slowly lifted, then we should expect um, better recovery.
All right, sir. But there also, of course, is a bit of a concern here, at least for the business sectors here. You have been very vocal about this whole issue of giving or at least handing out employees their 13th month pay. Is this something that businesses are amenable to now? You have the Labor Department saying that it should be prorated. Will that be a boon or a bane for the sector? And where do you plan to source this? I mean, what's the development really when it comes to the talks? There are plans for 13-month pay to be subsidized, or at least for business owners to get a loan from state banks. What's the latest on that one?
Well, we know for a fact that TB 851, which mandated the payment of 13th-month pay, is an obligation on the part of businesses. But in 1975, when the presidential decree was released, the implementing rules provided for exemption, but the the Dole, the Department of Labor and Employment, in its latest issue, one says that the exemption will no longer apply. So there will be no exemption, no deferment, no postponement in the payment of 13th month pay. And the Employers Confederation of the Philippines is very vocal in saying that the micro, small, and medium enterprises would find it extremely difficult to comply with this requirement under the law, so that it called upon the government to provide assistance, especially to micro and small enterprises, because at the height of the quarantine restrictions during the ECQ, practically 70% of these micro and small enterprises closed down, and right now about 50% of them are still not operating. So how do you expect micro and small enterprises to pay their employees the 13th month pay? So that I think the government should provide assistance, so that the micro and small enterprises would be able to provide, to pay the 13th month pay of employees. At least, if the Dole estimates that the 1.5 million workers are affected, on the other hand, the Philippine Statistics Authority estimate that about 5 million workers are affected. So this would require anywhere between 3.5 million to
Okay.
13 million, if I'm not mistaken.
Sir, the spending plan, so the budget has already been transmitted to the Senate. What are you advocating for? How can the government be more proactive in assisting MSMEs? So far, what has been done has been largely on the monetary policy side, diba? So we've actually had less, lower interest rates for the MSMEs to borrow. The government has been pushing for them to borrow, even for that 13-month pay issue that you have mentioned here. They've also given loan moratoriums for people in general, and even businesses. So they've extended that. What more can the government possibly do apart from perhaps aiding those who have lost their jobs?
Well, the Asian Development Bank suggested that there should be a phased approach in the implementation of the economic stimulus packages, because obviously businesses are in different situation. There should also be a shift to digital transactions, because we know very well that micro and small enterprises are not really into digitalization. So this is an area which should be explored, and this is an area where assistance should be provided to micro, small, and medium enterprises, so that there would also be a shift or a transition to work from home, because during at the height of the pandemic, when the harsh restrictions were in place, in the case of micro, small, and medium enterprises, working from home was not a serious option. A preponderant majority of micro, small, and medium enterprises opted for temporary layoff, and there should also be a strict monitoring of the distribution of government support programs, and of course, it is essential that there should be periodic monitoring of the situation of micro, small, and medium enterprises. I've been talking about micro, small, and medium enterprises because the micro, small, and medium enterprises constitute 98% of the 920,000 enterprises in the country. And
All right,
this is how critical the micro, small enterprises.
definitely a huge representation here for the MSMEs when it comes, of course, the business sector, and how a phased approach would be really needed for the industry to actually recover. Thank you very much Sir Jose Roland Moya, Director General of the Employers Confederation of the Philippines. Thank you, sir.
Thank you very much,
Sir.
Jess and Dan.
Okay, quick 1 minute around the markets, Jess, especially as we still have very big earnings to be breaking here. Pure Gold in particular, third quarter net income, 1.65 billion pesos. That is on the back of revenues at 39.17 billion pesos, up 1.1%. That brings your 9-month net income to 5.05 billion pesos. And just taking a quick peek at how markets are reacting to that, we do see Pure Gold up by 0.2% to 42 pesos and 55 centavos. And I just want to take a quick peek, and it's really, really fun how markets are going now, because just this is exactly related to the top story, which is that ban, not necessarily ban, but no more new coal plants. And take a look at First Gen. This is of course close to the purest play, renewable energy company that we can get, and that is up by 5.1%. Recall that we've also reported that geothermal plants can now also become 100% foreign owned. So very exciting times here as our markets continue that slide from yesterday, down by 0.4% to just below 6,400 levels. And that's the first look into the business day. Today is October 28th. I'm Danie, Laurel.
Catch us again tomorrow at 9:30 a.m. I'm Jess De Los Santos. We are One News.